Well, welcome everyone. And I think everyone right now is actually just a few people. So we're going to give a few minutes to, allow people to trickle in, allow them to come in. But um, but for the people who are here, welcome. Very happy to see you. And we have an exciting webinar today. As you can see, a Black Friday webinar, which, everyone loves Black Friday deals. Um, but in the meantime, kind of as we wait a couple minutes here for people to trickle in, if you don't mind, I'd like to know what business you're in. What kind of industry you're in, or what you do for your consultancy or your self-employed business. And if you don't mind, throw that in the chat box and tell me what it is. Like, are you a professional alpaca shearer? You could be doing that. You could be a professional oat milk latte artist. I want to know what you are. Accounting and tax. All right. Well, Aaron, you're in the right place. We'll just give people a few minutes to trickle in. Okay. Jonathan does external building cleaning, window cleaning, pressure washing. Absolutely. I know that's hard work, but if you hustle at it, you can make some good money. That I do know. All right. People are trickling in. And for the new people, if you don't mind, throw in your job or throw in your industry into the chat box and tell us what you do. Okay. Just give us a couple more minutes here and we can get going on this. Annuity and life insurance sales. Okay. Very interesting. My girlfriend actually works in insurance herself, and every time she tries to explain it to me, my eyes go blank. So you must be very intelligent. Meal prep and private chef services. Okay, well, I wish I had you in my city. Bookkeeping. Okay. Well, Tanya, hopefully we can take your bookkeeping off of your hands after you watch this webinar. Well, Jonathan's fiance is in the insurance industry too, so I'm sure that he gets a lot of earfuls of information as well. Thankfully, she is able to give me advice on what type of insurance I should buy, so that's been a benefit for sure. All right. Well, I'm going to go ahead and get started here. And before we get started, though, let's just talk over, a couple housekeeping rules. For one, you're going to see, well, first of all, at the end of this session, we'll have time for a Q&A session. If people would like to ask some tax questions or collective questions or things like that, and I'd be happy to try to answer them. But if you can see here, there's both a chat box for this webinar and there's a Q&A box. So, like for logistical questions like I'm having trouble with the sound or visual or, what's going to happen after this? Can I have a recording of this or a copy? For those types of questions, if you don't mind, put those in the actual chat box, those logistical type questions. But for the Q&A session, like especially if you just think some questions, throughout this webinar, go ahead and throw them in the Q&A chat box. That should be available to you. Just so we can keep it organized and I'll have one, sort of centralized list when I go and handle the Q&A. But with that being said, let's go ahead and get started. And today we have a very exciting webinar about collective, of course, but it's even more exciting because it's a Black Friday themed webinar. And essentially, for Black Friday, we do one of our best deals of the year. And essentially, you can sign up for free. And I'll talk a little bit more about this in the in later in the webinar. But if you sign up by our Black Friday deadline, you essentially get your first month free and your onboarding fee waived. So you get to start with Collective for no money down, essentially. But here's our agenda today. First, of course, we'll talk about Collective because, that's who we are. We're Collective. And then we'll go through the basics of being self-employed. How do you pay your taxes? How are you taxed? What are some best practices of being self-employed? So on and so forth. Then we'll go into what an S Corp is. Because Collective, really at the end of the day, we are an S Corp company. If you came on board with us, you're either already an S Corp or we will turn you into an S Corp, is essentially what we do. And we'll talk about how we make being an S Corp easy. That's why we're here, right? And then, of course, Black Friday, like I mentioned a few seconds ago, it's our biggest deal of the year, and we'll talk about how that works. And then, of course, we'll get into the Q&A session, and I'll do my best to answer your burning tax questions. Okay, let's get the legal stuff out of the way. Think of this webinar as, essentially for education. Don't think of it as official legal or tax advice. The tax code is extremely complicated, and usually you have to have some sort of, official relationship with a tax professional before they can actually give you advice. So, before you put any of this sort of information into practice, consult with a professional, with some sort of tax professional before you do so. All right. Well, Collective, essentially you can think of us as an all-in-one financial platform, designed for self-employed people. We pretty much do the whole shebang. Here's your money when you're self-employed. Long story short, it's all over the place. You know, you have to know how to set up your business. How do I even properly form an LLC and an S Corp? You have to know how to keep your financial reports in order each month, especially if you're going to become an S Corp, it becomes even more important. You got to know how to estimate your taxes. That's harder than it seems, believe me. You have to handle your own bookkeeping. With an S Corp, you have to handle payroll, and so on and so forth. All of these, when you need to make a financial decision, all of these things affect it. You know, all of these things, which are kind of all over the place and chaotic, can affect which way you need to go, I guess, so to speak, when you're trying to make a financial decision. So it can be pretty complicated if you don't have some help. Here's your money at Collective. It's organized. We support, like I said, with the whole shebang. And usually, before a company like Collective, you'd have to have, several different softwares, several different professionals sometimes, and one, you might have to have a bookkeeper, that you pay, a certain amount of money per month. Then you might have to have the CPA, who just, files your taxes. Then you might not have to have a financial advisor, and so on and so forth. But Collective is essentially a platform that ropes, a lot of those elements into one place. Okay, well, here's our first poll question. And it's what stresses you out the most when it comes to taxes. And here we go. It's popped up. And please tell us what stresses you out the most. And I always like to guess. I'm always wrong, but let me see if I can guess the right one. Hmm. I'm gonna say I'm gonna say setting up your LLC or S Corp is the thing that stresses you out the most. It could be wrong. I probably am wrong. We'll give it a few minutes to allow people to answer. Also, this is Jordan Robinson. She's actually one of our members. She's fantastic. And she also has a fantastic last name, if I do say so myself. Alrighty, I think we can shut this one down. All right. I'm wrong again. Okay, so preparation and tax filing is the biggest sticking point. Okay. Well, hopefully after this webinar, your mind will be at ease a little bit more. Okay. Let's get into the basics of what it means to be self-employed, in a tax context. Okay. So there's a couple, I guess, sort of groups of taxes that self-employed people pay. And the first one, of course, are income taxes. And this is what most people think of generally, when they hear the word taxes. And essentially, the income tax is based on marginal tax brackets. So, and those marginal tax brackets are between 0 and 37%. So, for example, and what I mean by marginal is chunks of your money are charged different tax rates. So, and what I'm getting ready to say isn't necessarily accurate, but it just kind of it lays forth the concept of how this works. So, let's say that you make $100,000 a year in total. From $1 to $10,000, the tax rate on that might be 12%, or something like that. And then from $10,000, let's say to $30,000, that might be charged 14%, and so on and so forth. Different chunks of your income are charged different tax rates. Then, though, they also pay the self-employment tax. And, and this one isn't a marginal rate. It's simply just a flat tax rate. And it's a flat tax rate of 15.3%. And I'm getting ready to blow your mind. Okay, hold on. The 15.3% is literally Social Security and Medicare taxes. And a lot of people don't realize that. Like when they hear the self-employment tax, they think that it's just kind of a random tax that, business owners have to pay. But what that is your specific Social Security and Medicare taxes. This 15.3% is going towards your Social Security. And then you still pay. The interesting thing about this is even when you're an employee, working for somebody else, you still pay the self-employment tax in effect because you pay the Social Security and Medicare tax. It's even the same tax rate. It's 15.3%, but the only difference though, when you're an employee, is by law, your employer must pay half of it for you. So they pay 7.5% and you pay 7.5%. However, when you're self-employed, you pay both halves. This right here is why self-employed taxes are so expensive. So when you're a W-2 employee, your employer sort of takes care of part of your tax bill. They take care of part of your Social Security and Medicare tax. But here you pay the whole shebang. You pay both halves. So let's say, and this is example of someone that's making around, $100,000. They're both making the same amount of money. The employee's making 100 grand and the self-employed person's making 100 grand. But the Social Security and Medicare tax for the self-employed person is double. All right. Let's talk about sole proprietorships and LLCs, how they're taxed and how they work. This is essentially the equation on how you come up with your net income. And your net income is what you're actually taxed on. You're not taxed on the total amount of money you bring in. You're taxed on the amount of money you don't give away to business expenses. So for one, you'll have your total revenue, which is just the total amount of money you've made purely per year. And then you'll have your tax deductions, which is just another word for business expenses. That's essentially what they are. And then, of course, you get your net income. And that net income is either positive number, and that makes it a profit, of course, or it's a negative number, which means that you have more business expenses than you do income. You might have given, your business a little bit of money, like you might have injected some personal money into your business to be able to pay those additional expenses. But even still, if you did that, your net income will be a loss. It'll be negative. That profit or loss, that positive or negative number, will is reported on your personal tax return. on your on your personal tax return, excuse me, on your Schedule C. And your Schedule C on your personal tax return is literally your profit and loss statement. That's what it is. It'll show, your total income that you've made, and it'll show all the allowable business expenses that you've taken. And then those profits, whatever that net income is subject to the self-employment tax, the 15.3%, but it's also subject to the income tax. So tax-wise, being a sole proprietorship or just kind of stopping at the LLC stage, it can, depending on your situation, it can be a little expensive tax-wise. However, S Corps work a little bit differently. And what even is an S Corp? What is it? Before we talk about S Corps, let's talk about legal structures or business structures. They are formed with the Secretary of State. So, think of things like LLCs, limited liability companies. Think of corporations, think of a C corporation. That's formed with your state. Think of a partnership, which is essentially just, two or more people, unmarried people in certain instances, but two or more people on an LLC. That's what a partnership is a multi-member LLC. All of those entities are formed with your state, the Secretary of State's office. They require a formal organization process with the state. So you have to file, official paperwork with the state to form this legal entity, this business entity. And then they're usually required to file an annual report, letting the state know that, the structure is still in existence, who manages the entity, details about it. In some states, those annual reports are actually biannual. So you can file it every 2 years. And I believe that New York is one of those states. An S Corp, though, is something completely different from a legal structure. And as funny as this sounds, an S Corp is not necessarily a corporation. Has nothing to do with it. It's a tax election. So it's a way to ask the government to tax your legal entity, your business entity, in a certain way. So the IRS automatically decides how each business structure is taxed. So, for example, if you're a sole proprietorship or an LLC, you are, in terms of the IRS's eyes, you're taxed as a disregarded entity, meaning that it doesn't matter that you've set up this LLC, you're taxed the same way as if you didn't have an LLC set up. And the IRS's eyes, it's exactly the same. However, if you set up an LLC and then make an S Corp election with the IRS, you're taxed in a completely different way. And that different way could potentially save you some money. Long story short, when you're an S Corp, the owners, you don't pay self-employment tax on the business's profits. And essentially what happens is when you make that S Corp election with the feds, with the IRS, it creates kind of like an employee-employer relationship between you and your own business. You know, once that paperwork is filed, you literally become an employee of your own LLC. Now, you're still the owner, of course, like you are an employee owner of this business. But for tax purposes, you also become employed by it as well. You literally become an employee. So your wages, oh, well, let me back up. Since you're an employee, you'll pay yourself a salary. Your business will literally pay you a W-2 paycheck, just like you'd receive if you work for someone else, as a W-2 employee. But here's the cool thing about S Corps. The only chunk of your earnings that's subject to the self-employment tax are your wages, whatever you pay yourself in wages. And whatever's left over are the business profits. And the business profits, they're still your money. You can still pay yourself these business profits, but they're no longer subject to the self-employment tax like they were when you were simply an LLC. So we'll move on here and I'll explain it a little bit more. just kind of a recap here. This is how it works when you're a sole proprietorship in an LLC. Essentially, all of your profits are subject to the self-employment tax and the income tax. There's no way to pay yourself payroll. It's not how it works. So you pay both you pay both sets of tax rates on essentially all your money. S Corp taxation, though, is much sweeter. You've got your S Corp revenue at the top here, just your total amount of revenue that you have. And you've got two things that come off of that revenue. For one, you're paying yourself a salary. And that salary to you is an expense for the S Corp. It's an expense for the business. So your salary is an expense, just like any other sort of business expense. So you've got the salary and then expenses. That salary is subject to the payroll taxes, the 15.3%. That's still subject to it. Then, after you've deducted your salary, after you've deducted your expenses, your S Corp either has a profit, a positive income number, or it has a loss. And that both the salary and your profit or loss will still flow over to your personal tax return, to the owner's tax return, the owner of the S Corp. And then both the salary and the business profits are still subject to income tax. You still pay that. But where you get a break is the self-employment tax on your business profits. So let's talk about this a little bit more. Here's an example of how this works. On the left over here, you have a sole proprietorship situation or an LLC without an S Corp election. And here, I mean, as you can see, that top line is $160,000. That's how much money this person's made. Also, obviously, you can't pay yourself any wages. The owner of a single member LLC or a sole proprietor, you don't really own a sole proprietorship, but you can't pay yourself wages when you're either of those things. Which means that full 160 grand is subject to the self-employment tax, the full 15.3%. So just the self-employment tax alone is 24,000. Quite a big chunk, obviously. The pass-through profit is 160 grand, and there you go. The S Corp, though, is completely different. So in this situation, you make the same amount of money. You're still making $160,000 in the business. But in this situation, this person has determined that a $60,000 salary is a reasonable salary for them. Whatever industry they're in, they've determined that $60,000 is an appropriate salary. So now it's only that 60,000 that's subject to the self-employment taxes, the 15.3%. And then, so the self-employment tax at least drops from 24 grand to 9. So, and obviously that's a savings of literally $15,000. So once you reach a certain income level, it potentially could become pretty advantageous to become an S Corp. So as you can see, that pass-through profit of 100 grand is simply just no longer subject to the self-employment tax. And there's a fun little trick you can do too, to where your tax savings is the same as if you were to take 15.3% of that 100 grand. So there you go. 100 grand times 15.3% is 15,300. Okay, let's talk about reasonable compensation. People will ask me a lot. They'll say, okay, well, if I'm only subject to the self-employment tax on my salary amount, then why not just pay myself $1 in salary, and take the rest out as business profits? Why would I pay myself a high salary if I'm being taxed more on that number? And the answer is because you might get audited, unfortunately. And the IRS says about the salary is that it has to be reasonable. It's got to be a reasonable salary. But funny enough, and shocking enough, I know that the IRS would make something more complicated. I know that they're not known to do that ever, but there's no set standard for reasonable compensation. It's a facts and circumstance argument. So you're not going to be able to go into the IRS code, and it's not going to tell you step by step how to calculate an objective salary number. It just gives you facts and circumstances that you should consider when you're coming up with a salary number. And some of those facts and circumstances might include how many hours a week do I work in my business? How many years of experience do I have? Um, do How much money is the business making in total? That's something else that could go into your salary calculation. Uh, Obviously, your salary is a tax strategy. And the key, of course, is to strike a balance between tax savings, paying yourself low enough to where you save some taxes, but also paying yourself high enough that it could be considered reasonable in the IRS's eyes. But thankfully, collective or a tax professional can help you choose a number. Which one is best for you? An LLC without an S Corp election or an S Corp? An LLC is best, really long story short, for new businesses. But, well, let me clarify that. New businesses with very little earnings. If you're a new business and you have contracts right away and you expect to start making money right away, then that might not necessarily apply to that. You might want to be an S Corp right away. But, generally, LLCs are best for new businesses with very little earnings. Earnings that are below $60,000 in profit per year. That's a collective number that we give to just kind of, we've determined that's the number that makes it financially worth it. To where if you become an S Corp kind of below that 60 grand mark, it's likely that the additional administrative cost that it takes to even run an S Corp would overcome your tax savings themselves. So, what's the point if the amount it costs to run this thing is going to be above how much it's going to save you? Why even do it? S Corps, though, they're best for people who want to maximize their retirement savings. That's one. Who earn more than $60,000 in 1099 profit per year, but who also have enough cash coming into the business consistently to pay themselves a salary, to pay themselves a reasonable salary. Collective makes S Corps easy. That's why we're here. And I know thus far, I know it might seem a little bit overwhelming and that, S Corps might seem a little complicated, but we're here for you to make it easy. Okay, here's what it's like running an S Corp on your own without collective. It's a nightmare. It's all over the place. You know, you have to set up the S Corp. That is complicated enough in itself. Where do I file these forms? What's the appropriate date for my S Corp to start? And so on and so forth. Then, now that you have an S Corp, your bookkeeping becomes more important. It becomes more formal. So you need to keep up with it month per month. So you need some sort of software. You've got to figure out how to calculate your reasonable compensation. That can be a nightmare if you don't have some support, and so on and so forth. There's a lot of things to juggle when you have an S Corp. However, this is what it's like when you run an S Corp with us, with Collective. We handle the whole shebang. And instead of, you running around with your hair on fire, we will take care of it for you and make sure it stays organized and into one spot. We'll handle your back office so you can focus on your business. You know, we'll set up your S Corp. Of course, that's the first thing we do. We'll handle your monthly bookkeeping. We'll calculate your quarterly estimated tax deposits. We'll handle your payroll. We'll take care of both your business and personal tax returns also if you choose. And we'll give you some S Corp compensation guidance, some for the reasonable salary. And also, it's important to note the business tax return is included in your collective fee. If you would like us to file your personal tax return, then that is available for an added fee. But I'll get more on that later. We work with full-time solopreneurs making at least $60,000 in profits with minimal W-2 income, meaning some people will have a business and they might be making, above $60,000, but then they also have a huge W-2 job too that they're also working. That sometimes can make it a little bit less likely that you want to be an S Corp. So just keep that in mind when you're trying to determine whether or not you want to be one. Also, we work with sole proprietorships. People that don't have any sort of business structure set up, well, we work with them. We work with single member LLCs or PLLCs. LLCs or PLLCs already filing as an S Corp. We work with them. And then, of course, we give a suggestion to have at least $60,000 in profit. However, this isn't an objective requirement. So let's say that you're making $50,000 or $45,000 and you're still kind of interested in the collective services and becoming an S Corp, then I would still encourage you to, schedule a call with us and talk through how it would work. Collective, this is the best part, of course, we don't cost that much, compared to CPAs or other sort of, sort of solo professionals that charge you an arm and a leg. We, the whole shebang can be done for $349 a month. And then if you pay annually, though, if you pay the entire year up front, that average drops down to around 296 a month, because they give you a 15% off discount. So keep that in mind. And then we have a one-time fee of 199. And that essentially, sets up the business. And and also if you already have the business set up, that covers verifying your existing business, making sure it's in good standing and all of that. And then also it's important to note the business portion of your membership is tax deductible. So, not only are you getting, the savings from an S Corp, but you can also write off, a portion of our fee. Okay, here's even more exciting. For this month only, we're running a Black Friday deal. If you join in November, you'll get your first month free and your onboarding fee waived. So essentially, you can sign up for Collective and you don't have to pay us any money. And we'll go ahead and get started and setting up your S Corp, setting up your accounting reports, and moving forward with that. And just long story short, this is our best deal of the year. So I would take advantage of it, obviously. And then please feel free to schedule or to scan that QR code, schedule a call with us. Go to our website, collective.com. You can set up a call with us there. You can go through a tax calculator to see how much an S corp might save you. So and when you do come to this call, come with the code Black Friday 24. And that's the code that you can give to your advisor, the person that you speak to, and it'll waive your first month and your onboarding fee. And also too, keep in mind we will be sending out a recording of this 24 hours later, or I'm sorry, within 24 hours. So you'll be able to reference all this information too. Okay. Well, that's the end of the webinar. So let's get into your insightful, amazing questions. Well, we've only got two, but that's okay. If I am an existing LLC, do I have to reincorporate to become an S Corp? No, thankfully. We will make an S Corp election on your um, existing LLC. So that's not a problem. Like if you come in with an LLC already formed, then we'll make an S Corp election on your existing LLC. But if you come in without an LLC, if you're just a sole proprietorship, we will form that LLC for you before we make the S Corp election. Ooh, Jason has a good question. I'm a sole proprietor. Can the 2024 tax year be included as an S Corp for the whole year prior? No, unfortunately. So your S Corp election only starts when we get your LLC formed, when we get your LLC in place. So Jason, to be honest with you, it's really important that you either form an S Corp as soon as possible or to schedule a call with Collective as soon as possible. So we can schedule it or so we can form the S Corp as soon as possible. I've said as soon as possible about 5 times now. But long story short, that's what you need to do is get it formed so your S Corp can start soon. Okay. There's some more questions over here. Let me see. Oh, good. Michelle has a good question. I was paid commissions to me and not my LLC. Can I claim those earnings under my LLC? It kind of depends. And like when I hear commissions, it kind of depends on what kind of commissions you're getting. Like, let's say that you're a real estate agent. There are some states where your brokerage just cannot pay an LLC. They can't even pay an S. They can't pay your commissions to your S Corp just because of the rules of the state. But it kind of, and I'm sorry to answer to give the cliche tax professional answer of it depends, but it really does depend. Sometimes you're able to go ahead and include income under an LLC, even if it's not actually paid to it. But it just kind of depends on, what kind of industry you're in, what sort of licensing rules that are tied to it. So it depends. Sorry, Michelle. I wish I had a better answer for you. Can I take a gain from the S Corp and report it on the Schedule D? Hmm. Honestly, I don't know. I don't think so. Because really, the Schedule D, of course, is to report the sale or exchange of a capital asset. So I don't believe that you can actually report any gain on the Schedule D. Now, it might wash out overall, when you actually file your overall tax return, but I don't believe anything shows up, specifically on the Schedule D. But to be honest with you, James, I would speak to a tax professional that knew a little bit more about that. I'm not really sure about that. No problem, James. Good luck. Joy has a question. I am deciding between setting up an LLC and an S Corp. My business is digital branding and marketing, and I do not want to use my home address. I see for LLC, there's an option for a registered agent. Can I have a registered agent as an S Corp? Yes, you can. So keep in mind that an S Corp is an LLC filing an S Corp election. So you could go ahead, if you're not sure, which one you want to remain as, you can go ahead and set up an LLC. And let's say that you need to be an S corp later, you can make an S corp election on that LLC. So one way or the other, you're probably going to be an LLC in some form, even if you become an S corp. Now, here's the thing about using your home address. What you need to do, there are some registered agents out there. And just because someone's your registered agent does not mean that your address is anonymous. You can have a registered agent and your address will still show up on your LLC documentation. However, there are some registered agent companies that will list their address when they form your LLC or allow you to list their sort of company address as your LLC address. And that's kind of a way to remain anonymous. But it just kind of depends on the registered agent services. And if you came on board with Collective, we could give you a referral. And usually it's pretty cheap. Usually it's like $100 a year or so to be able to do something like that. And if you come on board with Collective, we'll give you a referral of a registered agent. You can throw $150 a year to not have to worry about your address being public. All right. Well, that might be all our questions. Let me see here. Let me just make triple sure. Looks like it is. Okay. Well, I enjoyed this very much. And thank you all so much for um, joining today. And like I said, I've got to stress this. This really is our best deal of the year. It's going to be a long time it's going to be several months before we run a deal like this again, just kind of for the reasoning of the type of the point of the year that we're in. So I'd encourage you to schedule a call. And even if you don't need to be an S corp, even if collective is not quite, even if collective is not quite the best fit for your business yet, we'll tell you that. We'll steer you in the right direction, and we'll give you some guidance on whether or not you even need to be an S corp yet. We'll come up, and if you don't, we'll come up with a plan and for the future, and we'll say, okay, Let's talk again a little bit more into the future. Maybe you'll need to be an S Corp then. And so, long story short, we'll do right by you and give you some good guidance. Up, up, one more question, or a couple more questions. One, when you elect to be an S Corp, are you able to remove it when the revenue changes? If business revenue changes and is less, that's a really good question. Yes, you are able to revoke an S Corp election, but it's a little complicated. And it's not just a simple thing to do. So usually you only you only want to become an S Corp when you are when you're relatively certain that you're going to have consistent business income. Now it's okay, sometimes things happen, and sometimes things happen, but generally you need to have consistent revenue before you want to become an S corp because it's hard to revoke it. Shouldn't we incorporate in Wyoming or South Dakota instead of California, which charges like an additional 800? Usually not. So I know that, if you go online and you listen to some tax influencers or just some other people giving random advice, they will tell you to go if you live in California, they'll go ahead and they'll tell you, set up an LLC in Wyoming or in Delaware or in a random spot like that, which you can do. It is possible, but that does not get rid of the requirements that California has. If you are living in California, they want some sort of business registration in California. So if you were to, set up in Wyoming or Delaware or something like that, California would eventually send you a letter, and they would say, we need some sort of foreign registration, from your foreign LLC into California, and then you'd have to pay the $800 entity tax anyway. And not only that, you now have to deal with multiple entities. You'd have to deal with South Dakota, and you'd have to deal with California. So a vast majority of the time, it's usually kind of a wash. It usually doesn't provide much benefit. Where that sort of belief stems from is when a large C corporation that's owned by, hundreds or thousands of shareholders, or maybe even a little bit less, when that C corporation is trying to find a tax home or a legal home. So, for example, companies like Facebook, Amazon, or some of these bigger corporations, they might form in a state like Delaware, because Delaware is known for having a little bit more lenient business um, a business legal environment. So the courts are usually easier to go through when you're in Delaware, things like that. So that's where it stems from. Okay. Adriana, how much more do you charge for individual taxes? Well, honestly, that depends. And the information for that will be released. We actually just recently started offering individual tax preparation. So there will be tiers. So more to come on that. Yeah, James, still situated here in California, so not surprised California still wants some money. Um, no, I understand your frustration, believe me. And unfortunately, simply where we live in the country determines, how much fees we pay to these random governments and things like that. And I agree with you that it is unfortunate. But I also agree with you. It's a good idea to avoid the headache later, to just go ahead and do it. So no problem at all. Thanks for your question. Okay. Now okay, well, one more. I'm desiring to begin my business cash clients only, which will take time to build. Could it be better to start as an LLC and when revenue increases, then change to an S corp? Absolutely. There's nothing wrong with that at all. So yes, like if you're not really sure, how much you're going to make, if you think it's going to take a little bit to, to build up the business, certainly set up an LLC first, and then you can always make an S corp election later when it becomes worth it. Absolutely. Okay. Yes, James. Go to really what you can do is you can go to collective.com, and I just put it in the uh the chat there. And there should be an area to schedule a call, and you'll be able to talk to a business advisor. And like I said, like they'll go through your income, they'll go through how your business works, and we'll even see if collective would be a good fit for you, or an S Corp would be a good fit for you. So certainly you can go to our website, schedule a call. If you see us on social media, like if you're on Instagram, LinkedIn, send us a message and we'll get a call scheduled for you. Um, but absolutely. All right, no problem, Michelle. It was a pleasure. And I'm going to give a few more seconds to see if anyone else. Thank you, Jane. Posed. Okay. No one's called me that before. I'm going to have to take a screenshot and frame this. Thank you, James. I'm posed right now, but when it comes to tax season, my hair is sticking out all over the place. I can't find my, shirt. Like it's crazy, but thank you. Okay. I believe that's all the questions we have. I enjoyed it so much. Best of luck to you, to all of your businesses, and I hope to see you as a collective member sometime soon.